Good morning, traders. This is Chris Buss with Traders Profit Compass with a bunch of names that are trades about to happen. Don't forget, run your video player at 1.25x. What I'm going to do for you is I've gone through and picked out a few charts for you. What I'm going to do is rattle off the levels where I think you can set an alarm and be on top of these trades when they do in fact trigger. And don't forget, well, let me take a step back. What I like to do is set a lot of alarms at key places on charts. And then when that alarm triggers, evaluate what I've got going on before I decide to actually take the trade. So the alarm is there to refocus my attention on that particular stock, see if it's something that I'm interested in, and then put that into the mix of the portfolio. Like for instance, you may be at a position where you're happy with what you've got, and in that case, you can just either reset an alarm or just let it go. But I like to have a lot of alarms going off because the alternative to that is forgetting about charts that are setting up. So let's proceed here, and I'll give you some chart setups and some names. First one, BE, Bloom Energy. Big descending triangle with price on a big ledge right here with a relative price void below. I think if this thing breaks 18, it's going to be gone. I think that's going to be your short entry there. So I would set an alarm at 18. You could set one at 18.50, but it's basically already there right now. So I would set it a little bit below at 18, and I would set an alarm at 20 on the top side for a potential breakout of this stock if it comes down, grinds its way into the apex of this triangle and breaks out. It may be a good long at that point. So just to recap, this is a very bearish triangle sitting on a very important level at 18.5. Set your alarm at 18. Set a topside alarm at 20. Now I went through a bunch of I went through the solar sector, and there's some the solar sector for the most part is sitting on a ledge. A lot of stocks are right down at critical points, and time will tell if they break down. But I think at this point in the market, if the market falls apart, a lot of these names are going to trigger, I would imagine. And so we're going to have to see, what happens in the broader market, and then what may subsequently happen in these specific names. So on this one, CSIQ weekly chart, you can see similar to that Bloom Energy, big downtrend now coming into key support at 32.50. So that's going to be your trigger level. And I believe if it breaks that level, you're going down to 25 almost immediately. You're in a price void there. And then there's support at 25. So you've got a potential $7.50 of downside there. And I would actually think that although you may get a bounce here at 25, I think it would be heading lower with a good chance to go all the way down. The reason I say that is usually on a measured move, you go from the top of the triangle, you take that distance, and then you project it lower on a breakdown. And if you do that, that brings price all the way back down into the 15 range. So I think this would offer a pretty nice setup on a short entry if solar starts to break down. So your key level there is 3250. Remember, this is a weekly chart. Plug Power, same thing. Got a really fast run up, topped out in the 70s, now has come all the way back near 25. You see this large volume over price support level here, and then almost nothing below it. So I would be setting an alarm in that 23 to 2250 area, at a level that you want to engage the stock. Some people like to set a tight alarm and then just, watch it day by day, put it into an active watch list. Then you can drill down to the daily chart. But you can see here that this is a massive ledge right here. And on the upside, I think you can alarm the 50, which is at, let's call it 29. And if price recaptures, bounces, moves higher off of support, recaptures all the EMAs, I like that setup at 29 to get a heads up that price has recaptured all the moving averages with a good chance to go higher at that point. And I will point out, if you know something about Plug Power or any stock in general, when I point out these key levels, you're more than welcome to take that stock long with a stop just below key support. So if you wanted to say, okay, solar has bottomed out, and you've got all these names sitting at key support, I mean, you won't find a better long entry than down at some of these levels. So while I'm pointing out these levels, don't infer that the stock is necessarily going to break down. Support is support until it's broken. My point is, with all of these stocks at support, one of two things is going to happen. They're all going to break down, and you're going to get peppered with short entry alarms, or they're going to hold. I doubt you're going to see one particular stock break down and the other ones are fine. Usually birds of a feather will flock together, and then you're going to get a bunch of these going one right after the other. So anyways, I would be setting an alarm here at 23, 22 and a half for a potential breakdown, move it into a big price void with really first support coming in around 1250. So that's a big percentage move. Run. Here's another solar name. Weekly chart, big bearish triangle, sitting on a ledge at 40. With a lot of indecisive candles the last 2 or 3 weeks, I would be setting an alarm just below for the potential of a breakdown. And if you wanted to, you could set an alarm, say 45 or 47 and a half for a breakout. And then I would be interested in taking a long once the 50 gets recaptured, or excuse me, the 34 week gets recaptured at 49.50. So that would be a level that I would be alarming as well. But notice the big void here down below 40. I mean, there's not going to be anybody home if that were to break. Sun Power, same thing, weekly chart, sitting on a ledge at 20 with $10 of air beneath it. I would be setting an alarm at 1950. Or if you're interested in a long, you could set an alarm just above as well. Or you can take it long right here, right now, and have a basically a $2 stop, right? If it's trading at 22, and you got key support at 20, you can set your stop just below if you wanted to take it long now. But like I say, the solar stocks are all right at key support. If you go on through the list, very few bullish setups in the solar sector at the moment. One sector I really like going into Q4 in a rising rate environment are financials. I prefer the KRE regional bank ETF versus XLF. It's a concentrated ETF on the regional banks, whereas XLF has, insurance companies and all kind of stuff in it. Your regional banks have the most direct exposure to a rising rate environment. They don't have the trading desks and all that ancillary type activities that a JP Morgan or a Citibank would have. So when I'm in the mode of wanting to get bank exposure, I usually opt for the regionals if it's an interest rate play. So here we had the quick move up because of the 25 basis point pop in rates over the last few days. And now we've broken above this key resistance level at 67. I noticed in the pre-market rates are down a little bit. You might see another red candle today. I like the idea of getting long KRE against 67 with a stop below. You've got a prior high up here at 70, but if it breaks out there, you've got blue sky overhead. And don't forget, we've got earnings season coming up. One of the nice things about KRE is you can just sit through earnings season with all the regional banks reporting, and you don't have that single stock risk of that you would, if you bought an individual name within the regional banking sector. So that's a really nice way to play a basket of these regional names that, if you agree with me, rising rate environment should be helpful to the banks. And also, remember, cyclical sector activity in the real economy building, that should be good for banks. But regardless of the fundamentals, you've got a very nice technical setup right here. You've got all the EMAs breaking higher, bullishly stacked, and breaking out of this consolidation range. So I'm looking for higher prices there. If you get a entry even from here, or you get a red day today, I like the idea of getting long KRE into Q4 and sitting through earnings season. I like energy going into Q4 as well. We had some of us got XOP at 90 and were able to get this pop. And now yesterday and even today, we've got some corrective activity in oil. This is an ETF, the oil and gas production, obviously levered to oil prices. I want you to do two things. I want you to alarm 99, and I want you to alarm 90. Here's the thinking. We've had a fast run up. Maybe we get a pullback all the way to 90. I would be a buyer there. Why? That's a key breakout level. See, it was resistance here, broke out, support, support, it broke, then broke out again. So 90 is a very important level. So what I would do is have this downside alarm, and if you get the pull in to 90, I would be a buyer there with a stop just below. But what also may happen is you get a little, a halfway pullback, down into 95, something like that, but then reaccelerates. I would buy the breakout of 99 and look for higher prices in oil. So I like that one. Blue, biotech company, definitely in a downtrend, but with a big $5 gap to fill above, with the moving averages starting to curl up and price getting close to this $20 gap entry. I like that trade. I like gap trades. They're clean. They don't always work, but you got very well-defined levels that you can shoot against. So for instance, on this stock, set your alarm at 20. If you wanted to, you could add a certain degree of safety to the trade. If you wanted to alarm the 50 at $20.72 right here, and say I'm gonna buy a recapture of the 50, and then look for a gap fill up to 25, or you can just take it on the entry at 20. What may happen is the 50, you can see it's declining. Maybe it takes a day or two to get there, but at some point the 50 is going to align with the $20 price level. And then if you get that breakout, you will have recaptured the 50 and entered the gap in one shot. And then I think that would be a nice entry. And then you just set your stop below and look for a gap fill up to 25. CF, fertilizer company. We've been talking about it. We flagged it last week, along with MOS is a name you might want to research, and NTR, Nutrien. But as far as CF goes, we just got the breakout. You've got a tight, long entry right here against, say, 55.50. And so I think you can be long with a stop just below and see if we get some follow through from this breakout. I like fertilizer. Again, another cyclical type name with the commodity complex being in bullish mode as well. So if you look at all the fertilizer stocks, they're all moving higher, all either breaking out or about to break out. So I like CF right here with the tight entry on the breakout. WestRock, another economically sensitive name. They're a packaging company, basically cardboard. You've got a trading range from 48 to 53, been toggling in it for a while. Set yourself an alarm at 53 and set yourself an alarm at 48. Why? If you got the breakout at 53, I would be a buyer there. You've got a $5 measured move from 48 to 53. So then your target would be 58. If it toggles back down to the bottom of the box, you can be a buyer there against support with a stop just below, and then your first target would be back at the top of the box at 53. And then with any luck, you get the breakout for 58, but you're already in a winning trade. So I would set my alarms at 53 and 48 and be ready to go if either one of those fire. Costco, we had gotten this breakout from 385 way back when was a great trade for us. I'm not quite sure where exactly I got out. Somewhere in here, 455, something like that. But that's neither here nor there. Now it's a new trade, right? Got a double top. Two peaks, equal level. But look, notice the bearish divergence on PPO and RSI. You got the first peak here, and then you got an equal peak, but at lower momentum and lower RSI. That's usually a money setup for a double top. That double top would trigger on a breakdown below 445, and then the measured move would be from 445 back up to the high. Let's just call it 470. It's a little less than that, but that's calling for a $25 move, which would bring it back down towards 420. And what I've done is I've laid on the Fibonacci retracements, and you can see that a 50% pullback of this move would put it right back at 422, 420. So, make a long story short, I would alarm 444 for a breakdown below the 50 and below key support. You can see that we've got some larger volume over price bars in this profile here, but then we move into a relative void where I believe price could move pretty quickly. I like to see that when I'm either going long or going short, going into a void like a gap, or in this case, an area where there's not a lot of technical support. That usually results in a fast move. And certainly what would happen if this thing broke down below the 50, all these people here would realize that they're wrong because they bought this breakout. You know, they've been going along, they're still in, and now as soon as they lose the 50 and this level, they're losing money. So that triggers them to get out of the trade. People that bought in here realize that they're wrong, and that gives fuel to a fast move down. Now, if you're interested in Costco for the long side, you got to pay attention right here, right now, because this would be a logical place for a bounce. If the market gathers itself and, you know, starts to move back up, you may very well find that this tag of the 50 at key support holds, and then you got a nice compelling long entry where you can set your stop at 444 or 442.50 and then look for a move back up to 470. So either way you cut it, Costco is at a key inflection point right here, sitting on the 50. Sorry about that. Disney. Gather my thoughts again. Okay, we've got a level here with the 200 right at 172.5, and we've got a large volume over price bar coinciding with that level. I would be setting an alarm there with the same idea that we've had for most of these other charts. Any breakdown below the 200 and below this value area, you can see that back here, big void in volume over price. We've got a gap down here that's going to be a natural target all the way down at 160. And then we've even got a gap way down here as well that over time will eventually get filled. Who knows when that might be? All I'm saying is that there's going to be a moment of truth come up for Disney, and it may be market driven or it may be earnings driven, but there's going to be a moment of truth right here between 170 and 172.5 at the 200, where it's either going to hold or it's going to break. And I think either one of those is either a long entry at the 200 and key support, or a short entry on a breakdown. I think both of those, or either of those, could be very compelling trades. And I'm not particularly interested in the long side at the moment, given where the market is. But I'm going to be ready to take it long. And so I've got a short alarm set down here at 170. And I've got the 200 alarmed at 172.5, because I think if it's going to bounce right at the 200. So if the market pulls together, may be interested in taking a long there. DraftKings, nothing really imminent on this chart. We had the fast run up to 63.5 where it failed, and now it's coming down. You can see this big value area between 54.5 and 47. I think you want, if you're interested in the name, I think you want to set an alarm at 47. I think this stock is bound to come in and tag that level, and that would be a logical place for it to hold. If it doesn't, it's coming back to 42. You can see that level was important in the past. But here in the middle, I don't think you've got an objective line to shoot against. If you wanted to, you could set an alarm at 52 on a recapture of the 200. But aside from that, I think you've got to wait for price to come in to 47. Docusign, it's more or less been a darling over the last couple of years, but it's one of those really high valuation names, doesn't make any money. And now with rising interest rates, those are going to be a big headwind for these type of bubble names. And so you can see that price was rejected here at 315 and it's come all the way back to 260, and we've got the 200 right below. You can see that 260 was important. Back here, resistance, rejected, and then the breakout. And now here, just yesterday, we had a look below, and then they bought it back up in the afternoon. I think, price definitely has muscle memory around 260. If you believe that we're going to be in an interest rate rising environment, I think Docusign is going to be like the poster child, or one of them, with the bubble name headwinds. On the downside, I think this 200 will be a problem. From the standpoint is there's going to be buyers there at 250. So what I'm going to do is simply set an alarm at 250 at the 200 so I don't forget about it. And then if and when that triggers, then I'm going to refocus on it for a potential short. If it loses the 200, I think you may get a move all the way back down into the low 200s, if not further, depending on what's going on in the market. But I think this 250 level is going to be really important. And you know what? If you're a Docusign bull, you basically buy it right here at 260 and set your stop, just below, and see if it comes back. That's not a trade that I want to make right at the moment, but it is a key level. And if you wanted to take that trade, you certainly could with a tight stop. But notice RSI is well below 50 and PPO lost the zero line. So those are both in the bearish regime, and with interest rates on the move higher, and being a stock or a company that doesn't make a lot of money or any money, I think it's going to be tough in the near term for Docusign to make a move higher. I just got a couple more for you. 5, the discount retailer. Big, fast move down from 235 into the 200. Printing a textbook bear flag. If you take the measured move of the first leg and extend it from the bear flag, you get a number or a measured move target down towards 155. You can play that one of two ways. You can either short it on a break of the 200 here at 185, or you can wait for this 180 level. And you can see how important that's been. Support, 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 all the way back. Wait for that to fail before making any kind of a trade. So that's going to be my approach. I'm going to alarm 180 and then bring it back into focus when and if that alarm goes off. But I think at a minimum, this is going to come back to tag that level, and I'd be shocked if it just goes higher from here. This is a classic bear flag setup. Doesn't mean it's going to work, but I think we're going to come back down, as we have in all these other occasions, to tag that 180 level. Bullish setup for you on MGM in the gaming sector. We've got a trading range from 37 to 44 that we've just broken out from. If we add 7 onto 44, we get 51. That's the measured move target. MGM is primarily a domestic gaming company. Remember, they bought a lot of those Las Vegas Sands U.S. gaming properties a while back, and with very little China exposure. So we've got a breakout here. I think you can be long against 44 with a stop just below and have your target be 51. And while I'm talking about the gaming sector, I saw some other really nice setups in that group. IGT is one that comes to mind. Another one is Boyd Gaming. I believe the ticker there is BYD. And also County. I believe that it's either County or Century. CNTY has a promising chart. What I would stay away from is all the Macau properties. Las Vegas Sands, Wynn, Melco, all that stuff has got a cloud over it with the Chinese regulator making a lot of noise. I think the way to go in the gaming space is going to be domestic gaming properties. So let's wrap it up there. Take the trouble to set the alarms on these stocks, if you're interested in them, and then you will be locked and loaded, ready to go, and you won't miss a thing. When and if they go off, you can reevaluate, see if you want to take the trade. So I hope it helps. This has been Chris Buss with Traders Profit Compass. Talk to you next time.